Hello everyone, my name is John Drennen. I'm the sales manager at Fairway Independent Mortgage Corporation here in Las Vegas. I'm here to tell you what you need to know because other lenders are not. There was welcome news for consumers as inflation continued to inch lower in October. Plus, tight housing inventory is still boosting home values. Here are last week's headlines. Inflation inching lower, pending home sales plunge in October, home values still standing strong. Inflation inching lower. October's personal consumption expenditures showed that the headline inflation was flat for the month with the year-over-year reading from 3.4 to 3%. Core PCE, the Fed's preferred method, which strips out volatile food and energy prices, rose by 0.2% in October. This year-over-year reading fell from 3.7% to 3.5%, the lowest in more than 2 years. So what's the bottom line? Inflation has made significant progress lower after peaking last year, with the headline reading at 3%, down from 7.1%, and the core reading at 3.5%, down from 5.6%. Plus, annualizing the last 6 months' worth of readings put together the core PCE at 2.4%, which is even closer to the 2% Fed target. Remember, the Fed has been hiking its benchmark fund funds rate, which is the overnight borrowing rate, to try to slow down the economy and curb inflation. Their last hike in July was the 11th since March of last year, pushing the Fed rate to the highest level in 22 years. The Fed did not hike at their September or November meetings, so they could continue to assess incoming inflation, labor sector, and other economic data. Many economists believe the progress lower is enough for the Feds to pause the hike at the next meeting, December 13th. Pending home sales plunged in October. Pending home sales fell 1.5% from September to October, reaching the lowest level since the National Association of Realtors began tracking this in 2001. This data measures signed contracts on existing homes, making it a forward-looking indicator for closings as measured by existing home sales. So what is the bottom line with this? Elevated mortgage rates certainly have caused buyers to press pause on the home search this fall, but tight inventory remains a key challenge as well. NAR's chief economist, Lawrence Yun, noted that the limited housing inventory is significantly preventing the housing demand from fully being satisfied. He added, it is vital that we continue to focus on boosting the housing supply by all means in all corners of the country over the coming months. Home values still standing strong. The Case-Shiller Home Price Index, which is considered the gold standard for appreciation, showed home prices rose nationwide 0.7% from August to September after the seasonal adjustment, marking the 8th consecutive month of gains. The FHFA House Index also rose 0.6% in September, with their index setting new record highs in home prices every month since February. Note that the FHFA's report measures home price appreciation on single-family homes with conforming loan amounts, which means it's most likely to represent lower-priced homes. FHFA also does not include cash buyers or jumbo loans, and these factors account for some differences in multiple reports. This means that home prices have hit an all-time high, according to Case-Shiller, FHFA, CoreLogic, Black Knight, and Zillow, more than recovering from the downturn we saw in the second half of 2022. Prices are now on pace to appreciate between 6 and 8% this year, depending on the index, based on the reported pace of appreciation through September. These indexes show that now remains a great opportunity to building wealth through home ownership and appreciation gains. As always, what does this really truly mean? A lot of great data, a lot of great information, but let's break it down. Inflation is going down. You'll see it at the gas pumps. Hopefully your groceries bills are actually lower also. There's not a lot of houses on the market, so it's actually allowing houses to continue to appreciate, while also the demand is higher than the supply. So everybody's saying we need more houses available. And a lot of these houses that are not going on the market is because people got the interest rates in the 2s and the 3s, and they're just not willing to sell them at this point. John Drennen, Sales Manager, Fairway Independent Mortgage Corporation here in Vegas. Now you're in the know.